every trader hears about risk management, but what does it really mean? What does it mean to manage risk in your trading? Our guest is here to talk about that today, Tony Dreger. Tony, thanks for being here.
Pleasure, Tim.
Well, what do you mean by risk management? What does it mean to you on a practical basis in your trading?
In a nutshell, people ask me that all the time. It's knowing where you're going to get out before you get in, and it's stripping any kind of surprise out. So risk is, where are you when you're wrong? What are your losers going to be? And if you don't know that, and that element of surprise is out there when you're short or long, you open a position, then you don't know what you're capable of doing because, again, you didn't predefine what that risk is. So risk is where your losers are, and managing that risk is knowing, hey, if I'm wrong in this trade, and you're going to be wrong, I'm wrong all the time, where are my exits? So I know, hey, this fits within my risk appetite. I could take this type of risk. I know it's within my profit target, 1.5 to 1 type of range. So my strategy is doing that all for me, and I leave the element of emotion and kind of dehumanize me as a trader.
All right, so looking at a chart, where do you find those levels where you say, this is where I'm wrong, it's time to get out? What does it look like on a chart to you?
Well, because I take a contrarian approach and I look at fading highs and lows for areas that might be too expensive or too cheap, it's usually that high. And if you're fading off of highs because you think they're in temporarily, then above those highs where it'd be just from a practicality standpoint where you're wrong. And that's one thing that I think a lot of traders, you have to realize that, traders and markets, especially markets, they don't understand a 1-minute bar chart from a 5-minute bar chart and so on and so forth. But one thing that's common, support and resistance might be different for different traders and different strategies, but one thing I think is common, and you know this as a trader, is that highs and lows, especially overnight and day session highs and lows, are important. There are always targets, there are always stops there, they're always fishing for it, they're always fading off of those levels. And so I want to know and be privy to what most of the rest of the markets, guys I'm trading against, are looking at, and those are typically day highs and lows.
So intraday, I can see you're looking at the high of that intraday. Do you ever go back and say what was the high of the previous day or of a pivot point of a previous week, anything like that?
I always look at ranges from the previous day to see if we could retest them and break out to identify a potential trend, because if I have a trend that's lining up, I don't want to fade it, So I do look at that on a daily and weekly, but as the further you go back, the less relevant it means. So yeah, if there's a high or low on a weekly or monthly basis that sticks out, and that's how I define what's an important high or low, if it sticks out on a chart and it's just floating out there, I'll look at it as a target the market might want to go to. But I'm an intraday trader, so I'm less likely worried about what happened a month ago, a week ago, and kind of want to keep things to overnight and day session relevance.
All right, so you've got the high or the low of the day, and that's where you're setting your support or resistance levels based on what that is. How do you then decide what the profit target is based on those how much you're risking?
Well, I really don't look at that as support or resistance. I look at it being relative to markets within a complex. So if you trade gold, and again, you want to keep and have an idea where the chart of silver looks like. Okay, so those are two markets, ancillary correlating markets within my metal complex. They relate for obvious reasons. So it doesn't matter where their highs are. It matters relative to each other. So silver made a high at 1 o'clock in the morning, or let's say 9 o'clock in the morning, Chicago time, and so did gold. They both come back. They retest those highs. Silver went through them, but gold didn't. That doesn't get me bearish and start selling it. It gets a flag to go up that maybe price has gotten a little overdone in silver. It's overbought, and gold is weakening up relative to what silver just did, its cousin or sister. Now, if charts always trade alike and markets always trade alike and they look alike on charts, I have no idea where the market's going. There's no clues. It's like playing poker and the guy never changes his disposition when he plays. But if he shifts when he bluffs, now that's invaluable information. And so I need to look at divergences or shifts, and I use highs and lows to kind of gauge, okay, one did something, the other one didn't. Let that be a kind of marker as to where the market might want to go next.
And then what are you waiting for to find a confirmation of that, to get some idea of where it is to go?
I lower the time frame of my charts, and I look for the market physically showing me it wants to go down. So on charts, again, the market doesn't know a 1-minute chart from a 5-minute chart and so on. But what it does show me physically, it gives me, number one, the market time, the gold time to catch up and indeed make higher highs. So I'm not just getting in and out on a lot of false signals. So I allow time on a smaller time frame chart to roll over and show me not only where it's starting to make lower lows, maybe on a 5-minute chart or on a 3-minute chart, but also it defines and shows me where to get out for a loser, and that's the most important part. Not winners. And I always say this to people. I got a 5-year-old son that can get out of winning trades. Show me where you're getting out of losers before you get in, and that's going to allow you to be more comfortable stripping surprise and emotion out. But when you wait a little bit and you could see maybe that previous high is of the move or the day session as to where you're going to get out for a loser, it manages your risk for you, and it just looks like, hey, the market is going where you think it was going to go.
Tony, thanks for your time.
My pleasure, Tim.
You're watching